Stock Lunch is here. We're going to take a look at three big movers of the day. And here with our trades is Quint Tatro, founder and president of Jewel Financial. Up first, Quint, is Dupont, that company pre-announcing disappointing earnings results before the opening bell this morning. The report sending shares lower. They are now off more than 13%. Your trade on Dupont.
Yeah, Tyler, thanks for having me back. First of all, this is a no-touch or a sell for us. You know, it's always enticing to look at a company that's, down on news and think, oh, it's an overreaction and go ahead and pick up shares. But you got to be very, very careful, especially in an environment where so many other things are working. Managers are going to dump their laggards. They're going to move into things that are working. Ultimately, yes, they lowered guidance. They talked about destocking. They talked about China demand. They also have a goodwill charge of $750 to $850 million. Here's the thing, though. Despite the lowered guidance, the stock wasn't all that attractive to begin with. 16 times forward earnings. Now, with those revisions, it's obviously going to be even higher. They do have a decent balance sheet and $2 billion in cash, but I think you got to be patient, wait for the dust to settle, and then look to move in. It's not for us here.
Up next, Quint, we have AT&T shares dropping today after posting a fourth quarter earnings miss. The company forecast a lower than expected adjusted earnings for 2024, but slightly beat revenue expectations. How do you trade this one?
Yeah, Contessa, I really want to like AT&T. I've always wanted to like AT&T, but I just can never touch it. The debt, the balance sheet just keeps me away, thankfully. But this is kind of the same story. I mean, they did beat top line. They missed bottom, but then they turned around, lowered guidance going forward. If you dig through the report, they had some positives. Latin America was up like 26% year over year. There were some corporate segments that were up, surprisingly, and that's fine. But the reality is we're in the midst of a turnaround here, and the midst is the key. You don't have to be early. They have a pretty significant debt level, and they pay out 50% of their earnings in that fat dividend, which means they don't have a lot to work with as far as paying that debt down, et cetera. So yeah. I think, again, kind of like DuPont, you got to be patient. It's not for us here.
In fact, AT&T says it expects to deliver adjusted EPS growth in 2025. It's just looking past 2024 and, down the road there. So I think that's a great point, Quint.
All right, finally, we got IBM to report after the bell today. The company's stock has had a nice run, nearly doubling in price since its lows about a year ago. Your thoughts on IBM, Quint?
Tyler, I like IBM. We're long IBM for clients. This is one going into the print. I'm not so sure I'd chase it, but any pullback in IBM, if the market, which looks a little frothy today, and maybe we get a little pullback, this is one where I would pick up shares. I mean, IBM, missed the hardware to SaaS conversion early. They totally missed that, but it looks like they're early, or at least in line with the AI movement. And that's really giving them some decent tailwinds. It's not cheap, 17 times forward. They do have a high debt load, but, price to sales 2.6, 11 billion in cash. This is a decent company, a turnaround. But as you put it, they've run a pretty good amount, I think. But any pullback, if you look at that chart, that long base, I think gives you an opportunity to get in on a pullback.